Hello and good morning, folks. It's Monday the 13th, a distant and young cousin of Friday the 13th. And you're listening to Almus Market Mornings, your daily dose of global financial updates. After weeks of dull move in currency markets, it's time for an increased volatility as the US CPI continues its surge, keeping the market participants hooked with further tightening. We've seen the overnight action across indices in equities and also the currency markets move quite significantly. So, JK, what do you think? What's going on? What are the updates for us, and how do we look for the markets in the coming week?
Hey, good morning. Yes, I think Friday was a terrible day for the markets, both bonds and equities. After the release of CPI, the data into which the market once again went with some sort of optimism that inflation might be peaking and may come lower, then Fed will pause after hikes in June and July. But they were all taken by root shock at 1% month-on-month increase in the headline CPI versus 0.3, and also year-on-year jumping to 8.6 is highest since 1981 is really something that the market was not prepared for. So it was not surprising that stocks fell by 3% almost, and then uh, yields rallied big time on all across the yield curve. In fact, now we are seeing 2 over 10-year yield curve is once again on the verge of inverting because the difference is just 1.5%. Sorry, 1.5 basis points. That is what it is. And 5 over 10 is already, uh, inverted. 5 over 30 is already inverted. So added to that, we had Michigan Consumer Sentiment Survey, which came very bad. So the picture that we are getting in US is one of real stagflation on the cards, and definitely a recession down the line, maybe in 2023. So markets had nothing to really take heart from, and they sold off all the risk assets and the bonds also. Only thing that gained was gold, because now the yellow metal bulls feel that the central banks cannot hike a rate to such an extent as to the way inflation is ruling. So there will be no let up, or rather the real yields are going to go more and more negative, which means that gold is becoming more and more attractive. So gold had a good jump. uh, in terms of gains of percentage in gold, it was not significant. But if you look at the dollar strength against other currencies, gold actually strengthened, which itself is indication of the fact that gold is now getting very good support from the market. So on the dollar, of course, euro continued to slide. What started after ECB meeting, it has continued to slide. Almost 2% down now. Yen has hit almost 135. Then commodity currencies, Australia, Canada, and all down because again China is talking about not relaxing the restrictions as much as they had earlier planned. So that's again a bad news. In Europe, I think there's another election in France where Macron is fighting a very close tussle with the far left party. So that uncertainty is also there. But amid all this, I feel that we are reaching an inflection point in the currencies. Dollar yen 135, and Friday we had a rare joint statement from BOJ and government, which so far they were always speaking different languages, and now they had a joint statement where they were saying we were closely watching the one-way move in the currency. In terms of euro also, I think anything near 1.03, it's going to become very sensitive, because that will reflect upon the stability of the eurozone. So I think we are somewhere getting closer to central bank action, either through a policy measure or even direct intervention. So that is something that we will watch out. And the downward correction in the dollar, which was there in the last week, has abruptly ended. We are once again going towards 105. So that is where we are. On the rupee, of course, we had 2 consecutive days of uh, new high close. And with this move up in the dollar index, we are seeing a gap up move happening in the USD INR today, possibly towards 78.20. Well, the rupee's weakness is just an alignment with the dollar index movement also. So I think the RBI will be not so aggressive to push it below 78 again, but definitely if it starts going towards 78.20, 78.30 or one-way move, if they see, they will come and intervene. So the direction for the USD INR is also up, but I think the momentum is going to be lower compared to other currencies. So we will see dollar rupee probably settling into a new range between 78 and 78.30, or maybe even extend to 78.50. Only if there is any intervention, there might be some sell-off in the USD INR temporarily. Uh, One more thing that may be giving some heart to the rupee bulls is the fact that oil has now once again come below 120, and with all the fears about recession and all that, maybe oil has a chance to correct much deeper if it breaks below 118 on a technical basis. So maybe these are some positives, but overall USD INR direction is higher. We are once again entering into a very busy week as far as the economic events are concerned. We have India inflation today, CPI, some moderation expected, but still above 7%. And then we have Fed meeting, BOE, BOJ down the line, and lots of other data as well. So look forward to a very busy week, and currencies are at very important levels where it can either slide big time or can reverse course if there is a central bank intervention. So looking forward to a very busy week, Shikhar.
Okay, that is quite wonderful, JK. And yes, we do see a very busy week, and that's why we expect you guys to have good priority placed, if not a full priority placed on risk management. Because as JK mentioned, we are heading towards an inflection point in currencies, and it's kind of unseen scenarios lately that we have seen in the market movements happening. And also, as JK mentioned, we are seeing 210 yield curves inverting, possibly inverting. So an indicator which is quite frequently followed for recession. Everyone in the markets are talking about stagflation, so things need to be looked after quite closely. We'll keep coming up with the fresh new updates on regular basis for you. Till then, we take goodbye. Thank you so much for joining. That's it for today.